Global markets stay upbeat as strong U.S. jobs data and blockbuster tech earnings push the S&P 500 and the Nasdaq Composite to fresh record highs. Back home, the Nifty 50 gained for a second straight week, ending above the 24K mark. Auto stocks led the rally with M&M, Bajaj Auto and Samvardhana Motherson among the top gainers. Marco Rubio says the U.S. expects a response from Iran on a proposed peace deal today, even as tensions continue in the Strait of Hormuz. Meanwhile, Trump announced a 3-day Russia-Ukraine ceasefire beginning the 9th of May, alongside a planned prisoner swap. SBI Chairman C.S. Setty says the bank expects a better NII and margin trajectory in FY27 while maintaining credit growth guidance of 13 to 15%. Management flags strong corporate loan demand, robust April credit trends, and no visible stress in the loan book despite global uncertainties. Titan delivered a mixed Q4 with strong jewelry growth offset by margin pressure and weaker profitability. Meanwhile, Tata Consumer posts a strong quarter driven by robust domestic volume and sharp growth across newer businesses like Tata Sampann and Nourishco. Swiggy reports a mixed Q4 with food delivery margins hitting record highs while quick commerce growth remains subdued. The company sharply narrowed losses and maintained its quick commerce break-even guidance for Q1 FY27. Suvendu Adhikari is set to take oath as West Bengal's first BJP chief minister following the party's historic election victory. The swearing-in ceremony, coinciding with Tagore's birth anniversary, is expected to be attended by PM Modi and senior NDA leaders. The government formation suspense continues in Tamil Nadu, with Vijay still short of the majority mark despite backing from Congress, CPI and CPM. Sources say the governor remains unconvinced over TVK's numbers, with the party currently claiming support from 116 MLAs, which is too short of the required majority. Hello and welcome. This is News Now here on ET Now. I'm Harsh Saita. In terms of how the US markets fared, they've ended higher this week after stronger than expected April jobs data, which hit the street, and optimism around possible progress in the US-Iran negotiations. And both of those boosted investor sentiment. The S&P 500 rose 2.3% for the week gone by, while the Nasdaq Composite surged nearly 5%, both marking their sixth straight weekly gain and closing at record highs. Risk appetite was supported by resilient payroll data, though oil prices stayed elevated near the $95 a barrel mark amid continued tensions in the Strait of Hormuz. Back home, the Nifty 50 ended above the 24K mark for a second straight week, led by autos and broader markets, while PSU banks and energy shares lagged. Let me in fact go across to Snehi, who's here with the roundup.
Well, it's been a tumultuous week for our markets back home, but Nifty has managed to end with a nominal uptick of about 0.3% on the weekly basis and managed to defend that 24,100 mark. Sure, we did see levels above 24,350, but we've simmered down significantly from the week's highest point. If I take a look at what the broader market momentum was, a good show of support coming in from the broader end, large outperformance from the smaller end of the market. The small cap index was up by about 3.5%, a solid 3% uptick on the Nifty mid-cap as well. And over the course of the week on Thursday, Nifty mid-cap 100 hit a fresh record high as well. It was M&M, Shriram Finance and Bajaj Auto that were in focus, all of them on the back of their earnings, and they were the top Nifty gainers. On the flip side, you had some big losses coming in on the PSU banking side, because on Friday you did have numbers from SBI that the street was not liking. On the flip side, Titan on Friday did really well. If I have to take a look at some of the top sectoral gainers, you had Nifty Auto that was up 4.7%, followed by pharma, IT, metals, banks, FMCG started to show some pressure. In the red were FMCG, energy, and the biggest cuts coming in on PSU banks. The realty index, that was the biggest outperformer in the previous week, saw a little bit of profit taking, but nonetheless had managed to end the week with an uptick of about 1.25%. So it's names like Paytm, Polycab, and a whole host of broader market earnings that were in focus. But yes, the action was largely in the broader end of the market, while the Nifty managed to hold on to the 24,100 mark.
Okay, thank you so much for that, Snehi. And on to the big earnings, which came on Friday. State Bank of India reported a broadly steady fourth quarter, with profit rising approximately 6% thereabouts, and net interest income growth was just 4%. That's where the real miss was. Asset quality improved sequentially. Margins were under pressure. The NIM slipped, and management, though, maintained their FY27 NIM guidance of above 3%. The NIM was expected to come in at around 3%, but it came in nearly 20 bips lower, and that's where the real slip-up was. RBI's 25 basis point repo cut has already been reflected in the Q4 numbers, is what the chairman of SBI, Mr. C.S. Setty, said. And he also said credit growth trends remain robust. No major stress is visible in the loan book despite global uncertainties. Listen in to a slice of what he had to say. Okay, we'll get you that bite in just a bit. That's, of course, the commentary coming in from Mr. C.S. Setty, the chairman of SBI. And with regard to SBI, of course, it took a knock of 6.5% in trade yesterday. And that's on the back of that margin number, which was a sharp miss versus what the street was penciling in. 5% lower sequentially. We were expecting a growth of around 2 to 3%. And therefore, that miss was quite sharp. Let me, in fact, go across to the management in just a bit. We'll slip into a very short break, come back, speak to the management, or rather take that management bite from SBI. Stay with us.
उसका साथी रहे हैं। आज हमारा मंच पे उपस्थित है हमारा बुजुर्ग जो जीवन में किसी का सामने सर नहीं
Well, those are live visuals coming in from the swearing-in ceremony of Suvendu Adhikari. He is, of course, the chief minister now, almost, of West Bengal. Of course, you have the BJP forming the government for the first time in West Bengal. It's a historic moment, and you've got senior party leaders of the BJP as well as Prime Minister Modi in those visuals, who are all present at that swearing-in ceremony. The top brass, including Maharashtra Deputy Chief Minister as well as the Home Minister, is seated there on the dais for that very special ceremony of the change of government in West Bengal. You've got high voltage BJP power sitting there. You've got Amit Shah, Rajnath Singh, and you've got Prime Minister Modi there as well. And this is, of course, a big moment. We will be covering the swearing-in ceremony right here. We'll continue to get you live visuals all throughout the ceremony as well as speeches. So that's the live visual coming in from West Bengal for you viewers. It's a big day, and we'll continue to cover that. But let me, in fact, go across. We were speaking about SBI's numbers, and of course, the street was disappointed with that margin number. It came in sharply below expectations. Let me go across, listen into a slice, and help you listen into a slice of the chairman, C.S. Setty, and what he had to say with regard to the numbers.
Thank you for giving this opportunity to explain the numbers. I think our guidance on the NIM has been exit NIM of 3%, and I think we fulfilled that. And we are also giving guidance for FY27, NIM of 3% and above. The NII impact in the Q4 was essentially in terms of the 25 basis point rate cut which had happened in December is fully priced in the Q4. And what I see going forward is, one is the repo rate unlikely to be changed, which means that broadly the deposit rates will continue to be there. And by the way, we've done very well on the liability management. If you see, despite our significant growth in the deposit level, we have reduced our cost of resources.
Right.
So on the NII front, essentially the EBLR has impacted, and the double impact is, one is 25 base rate card, which is fully factored in December, and the EBLR book itself has grown. The home loan and MSMEs are mandatory linked to the EBLR. But I believe that I think we will be focusing on the asset mix and also ensure that the 3% guidance on NIM will continue to be holding on.
When you are saying 3% guidance on NIM, one moot question which I'm mentioning is what we have seen this quarter is a kind of something which is bottoming out of NIMs, and the situation will be better than other quarters?
Yeah, obviously, because there are no rate cuts are expected, which means that EBLR book will hold on at this level. And the new loans, particularly on the corporate side, we are looking at how a lot of times what happens in the corporate relationships, while you make less on the interest, we also have significant other income. That has actually contributed to the overall return on asset being above 1%, the guidance what we had given.
Right, so that's the chairman of State Bank of India explaining those numbers, 6.5% lower on that stock. I wonder how that plays out on Monday, and we will try to get you a better perspective as we get closer to that day of trade of Monday. But Titan was the other one. It surged in trade despite missing street estimates in Q4. The company saw its revenue surge nearly 80% as compared to last year, while profit was up nearly 30%. Stay here to break down the numbers for us.
Well, yes, overall, a largely mixed set of numbers coming in from Titan for Q4, but the street was rather cheerful about the kind of numbers that the company has posted. On a standalone year-on-year basis, the revenue grew by about 77.5%. Now, remember that there was a very heavy component of other operating revenue on the back of the ingots and the gold that the company sold in Q4 worth 6,204 crore rupees, which is why this revenue number looks very inflated at 23,934. If I remove this element from the overall top line, the revenue is at 17,730, absolutely in line with our estimates, and the growth of 31.6%. The net profit has gone up by 29.2%. We were expecting a further jump. It's come in at 1,124 crores, a miss versus our estimates. Similarly, for EBIT and EBITDA margin too, EBITDA margin has seen a lot of pressure. It's come in at 7.2%. We were expecting a flat show at 10.7%, but 7.2% is way below our estimates. If you talk about segments, jewelry is where we've seen strength continue. Customer demand for gold has remained intact despite volatile gold pricing, which was at historic highs, is what the management has said. The revenue has gone up by more than 50%, EBIT looking good at 36.5%. The India business EBIT has come in at 11.1%. which is within the 11 to 11.5% EBIT margin band that the company has historically been guiding. Tanishq Mia and Zoya combined businesses up 48%, Carrot Lane up 22%. Both of these are very strong. Both gold and studded portfolio are up 35%, and the international jewelry business, including Damas, grew by 174%, but recorded a loss of 82 crores on the back of that new acquisition. 27 net new stores were added in Q4, and Tanishq added 4 new stores in the GCC region. If you take a look at watches, weak performance coming in, the revenue grew only by 8%. The analog segment saw double-digit growth, but Titan and international brands saw double-digit growth, and smartwatches volume decline was partly offset by realizations. Eye care revenue was up 17.5%, in line with our estimates. Emerging business, a good show. The revenue was up 20.5%. A loss of 50 crores was recorded here, but fragrances and Irth saw good volumes, and Taneira business was flat, absolutely. And engineering revenue was up 60%, so that looked good. And to sum it up, the management said that they are conscious of macro volatility and fragile geopolitical conditions that are dominating the narrative globally. So watch out for how the stock reacts after the weekend. But yes, Titan, we've seen a largely mixed bag of numbers coming in.
All right, so that's Titan. Thank you for that, Snehi. In fact, Tata Consumer also reported a strong Q4 with a clear beat on revenue as well as EBITDA, while PAT and margins are broadly in line. India underlying volume growth saw a sharp 16% uptick compared to the expectation of 10%. So that was the other one in focus. The third one in focus from the consumption basket was Swiggy. delivered yet another strong set of numbers for the Q4 of FY26. Revenue grew 45% to 6,383 crore from 4,410 crore same period last year. Meanwhile, losses for the quarter narrowed to 800 crore versus 1,080 crore last year. Snehi with all of the details on this one as well.
Well, yes, for Swiggy's Q4 numbers, not a bad set. It's a mixed set of numbers coming in because operationally, if I look at those numbers, they look really good. Revenue is in line to a little bit better versus our estimates. It's coming at 6,383 crores, which is an uptick of 3.8% on a sequential basis. The EBITDA loss is in line with our estimates. It's coming at 697 crores. We were estimating a loss of 687 crores. And this loss has also reduced on a sequential basis, so looking good. What looks really good is the net loss number that's coming at 800 crores versus a loss of 1,055 crores in the previous quarter. So significant reduction and much better than our estimates of a net loss of 900 crores. So looking good over here as well. Now, if you take a look at the segment highlights, for the overall B2C business, the GOV is flat on a sequential basis. The B2C adjusted EBITDA loss reduced to 652 crores versus a loss of 712 crores. So that looks good. B2C adjusted EBITDA margins as percentage of GOV have also come down at -3% compared to -3.5%. So that looks good. Let's talk about the food delivery business on a sequential basis. Largely in line on the GOV front, contribution margin at 7.8% also looks good. The adjusted revenue has come in at 2,304 crores, which is a beat versus what we were estimating. Adjusted EBITDA has gone up by 9.2%, and the adjusted EBITDA percentage as a percentage of GOV, is at 3.3%, which is the all-time high versus 3%, and in line with our estimates of 3.2%. On the flip side, some weakness seen in quick commerce. You have the GOV that was down 0.7%. AOV has seen a knock of 6.2%. Orders are now at 700 rupees compared to 746. That's the average order value, and that's weak over there. Contribution margin has also reduced to -1.8% versus -2.5%. Slightly weak versus our estimates of just -1.5%. The adjusted revenue also slightly lower. Dark store count at 1143, implying that only 7 stores were added in Q4, which is very slow. The adjusted EBITDA loss has come in at 858 crores. We were estimating 870, so okay over there. Adjusted EBITDA as percentage of GOV has come in at -10.9%. We were estimating -9.9%, so weak over there as well. Out of home consumption continues to do well. The cash balance as of March 31st, 2026 is at 15,053 crores. What is absolutely important to know is that the management has reiterated their quick commerce break-even guidance for Q1 of FY27. That's this quarter that we are in, and that has been maintained. So overall, mixed bag coming in from Swiggy. Not too bad, but yes, some weakness seen on the quick commerce front.
Okay, thank you so much for that, Snehi. In fact, let me also give you some thoughts that have come through from the management. They've said that they aim to reduce churn in the second quarter. The management said that they're confident that healthy numbers will be visible after moderation of investments in the last 4 to 8 quarters or so. Listening to the management of Swiggy.
We believe that the movement will happen. Obviously, one part on the frequency as well. We don't believe the frequency that we are in right now is the right frequency to do essentially medium-term planning. That frequency will essentially then there is a movement that we expect to happen on NOV as well. That will also drive some part of that particular growth. But as you rightly mentioned, the majority of that number will essentially come from the acquired customer that we are getting. Now, we spoke about this number, and I think one of the other callers spoke about the net versus gross. The headwind that we have on our MTU growth now is right now specifically related to removal of the consumer base that transacts very infrequently with our platform. You will see that movement happen when that particular consumer base will be low enough, where our acquisition will allow for overall number to be essentially driven up as well. We believe that churn will be another 2 quarters, and after that you will see a healthy movement on our MTU numbers.
On capex, we have already said that we have seen heightened levels of investment over the last 4 to 8 quarters, which will start to moderate as we are behind on the overall warehousing investments that we have done.
All right, I'll take a bit of a step back now, talk a little bit about how the global picture is shaping up. And Donald Trump announced a 3-day ceasefire between Russia and Ukraine from May the 9th to May the 11th, coinciding with Russia's Victory Day commemorations. He said both Putin and Zelensky agreed to the proposal, but more importantly, Marco Rubio said the US expects a response from Iran today on a proposed peace framework aimed at ending the conflict and reopening negotiations around Iran's nuclear program. Listen in.
Fundamental question every country, not Italy, every country needs to ask themselves is, are you going to normalize a country claiming to control an international waterway? Because if you normalize that, you've set a precedent that's going to get repeated in a dozen other places. And if the answer is no, we don't want to normalize it, then you better have something more than just strongly worded statements to back it up. And that's the point I've made in all of my visits, not just here. I didn't come to Italy just to make that point. I would say that to any country that complains about the Straits, because that's what we potentially are facing unless we get a good deal from the Iranians. We're waiting to hear that today.
Okay, and let me also bring on board Srinjoy Chaudhary, who's joining in to explain the latest developments in the West Asian region.
This can't be called the fog of war because there's a ceasefire in place, but surely fog of peace would be right, because while there has been a ceasefire, there has been some fighting, some skirmishes in the Strait of Hormuz area. And now Marco Rubio, the US Secretary of State, says that yes, he's waiting for a proposal of peace from Iran. He says that the Iranians take time because their leadership is a bit scattered, it's a bit fragmented, to use his own words, because obviously of reasons that come from the war. A lot of top leaders have been killed in the fighting, but America hopes for a cogent reply, a peace plan from Iran. And then a day later, America will look at it and decide what it wants to do. But of course, the Americans are making it clear that they want the Strait of Hormuz to be open, the way it was before the war began. But of course, the Iranians realize that the Strait of Hormuz can be used as a weapon. And they have weaponized it, and it's hurt not just America and its allies to an extent, a large extent, but it's also hurt many countries in the world, including India, as well as other Asian countries like South Korea, like Japan and China.
Okay, thank you so much for that perspective, Srinjoy. Of course, a lot of that will move Indian markets as well come Monday. But ET Now is at the AI Plus Expo 2026 in Washington, D.C., which brings together over 20,000 government officials, industry leaders, and academic experts to discuss the future of artificial intelligence, cybersecurity, robotics, semiconductors, and advanced manufacturing. In fact, Sumita spoke with Lydia Logan to understand the growing concerns around job scares and layoffs due to AI adoption, as well as IBM's role in strengthening AI-led partnerships with governments and universities. Listen in.
We have partnerships at the university level, at the government level, with the school system, all introducing our Skills Build program, and that's for free. So it's everything from learning those technical skills like AI literacy, AI fluency, cybersecurity, data analytics, and the workplace skills, presentations, collaboration, all the things you need to be successful in the workforce.
So what's been the kind of traction, especially when you talk about the skills platform, especially for AI in India versus some of the other parts where you're operating, let's say here in Washington?
I think the difference is, what I spoke about on the panel, right? There are national mandates and a vision about what it's going to take to keep India at the cutting edge of this new technology in the wave, and IBM is right there with officials in India.
Right. So when we talk about skilling, we have to, of course, talk about the future of work, the nature of work, and the kind of changes that it's going to undergo. As of now, what part of the workforce of IBM is automated, and how is AI bringing in efficiencies? If you could give us some case studies.
Sure. So it's not so much about what jobs are being automated right now, it's about gaining efficiencies in the roles that we have.
But that also means that some of the jobs are going away.
But jobs are shifting, right? Just like I talked about our HR use case. It means we're putting people in roles where they are taking the human, the judgment and the more complex cases, and we're automating the parts of their jobs that were standardized, that are policy based, that rarely have exceptions. That's what's being automated.
Well, that's because we have seen companies sort of, undergo layoffs because of the efficiencies that AI is driving.
I don't know that it's always because of the efficiencies.
Well,
I think it's because of some of the. That's not necessarily true. I think that's what the sort of the narrative is, the fear-based narrative. It's really about what's the changing nature of work, and do people have those skills?
Well, that's Sumita Karir live from Washington, getting us that quick bite in terms of a view coming in from IBM. But completely timed out on this edition of News Now. It's a goodbye from all of us here who put this show together. Stay with us here on ET Now. More action to follow.